it's quite clear that Congress is being influenced by crypto. And there's a lot of things that are going on right here, right now, that are important for people to pay attention to, not just the rise and fall of Bitcoin. Can you tell us a little bit about what's going on right now in the regulatory space with crypto?
Yeah, I mean, first of all, I think there's been a sort of long-standing interest in fintech. You know, it's money and technology. It's Wall Street and Silicon Valley. It's a perfect confluence of power and wealth and control over key infrastructure, that it was always going to be a hot button area. And you can see this going back to PayPal or earlier debates over high frequency trading or internet banking in the 90s and things. And I think early days of the 2010s, there was still a bit of debate or a kind of cautious wait and see approach about how big these markets were going to get. I think it's clear now that they're here to stay in some way or another. That's not to say they can't fail, they don't have problems, but I think to the extent they could have been dismissed as a temporary phenomenon, that's gone, and now policymakers are asking themselves what to do about it. And of course, these markets have grown massively. You know, what were a few $100 billion even 3 or 4 years ago, and now in the trillions. And when you have exponential growth in value or market price in that sort of time frame, then a lot of people come out of the woodwork that start to care about those kinds of issues, to regulate them, to protect consumers, to either protect incumbents or to fight incumbents, and to deal with issues of systemic risk and how to define them relative to existing classifications. You know, is it a security? Is it money? Is it a bond? What is going on? How do we understand this technology? Is it new wine in old bottles or whatever else? And then I think the big shot heard around the world when it comes to stable coins in particular, and government digital currency, you know, this question of should we do anything? Does this show that there's a need for us to change? Was with Facebook. I think that's pretty clear that you can divide the world of crypto before and after 2008, you know, where you had the global financial crash and then you had Bitcoin. You can divide it before and after 2017 when the SEC said probably a lot of this stuff is a security, that we haven't made that determination before, and you saw a pretty big shift in how the market was structured after that. And I think 2019, when Facebook announced that it was creating Libra, really scared governments to get involved and to say, if we don't do something, we're going to lose control over money to sort of the new world of tech and the internet economy.
So explain to me, you know, we talk about CBDCs. Explain what a central bank digital currency is. I mean, it seems to me like this is one of the least understood things. And what does it actually do? Explain what it does and why it would even be talked about.
Yeah, I like to use the term digital fiat currency, or in the context of the United States, a digital dollar, because I think central bank digital currency is too limiting as a term. It's the term du jour around the world. If you ask most policymakers, that's the term they'll use. But that's in part because of a campaign that's already been successfully waged by central bankers to define the future of digital currency on terms that they get to control. The only thing the term central bank digital currency signifies is that it's issued by the central bank. It doesn't say whether it's issued in one design or another, who it's available to, what it's for. The only thing that has been determined up until this point under that framework is the central bank gets to decide things. And in my view, that's not the only way to look at it. There's the Treasury, there's the Postal Service. We should be looking at a digital dollar much more comprehensively across the government. But the thing that really differentiates most of those proposals, regardless of which entity issues it or which institution of the government is responsible for managing it, is that for the first time, a direct liability of the government would be available to average people. So until now, you know, you go, well, I've got digital dollars already, don't I? I have a bank account, I have a Venmo app. What am I gaining by this? Well, you have an IOU of the bank, of Venmo, of PayPal. You do not own a direct instrument issued by the US government. The only instruments that you can own directly like that are coins issued by the mint, paper currency printed by the Bureau of Engraving and Printing and issued usually by the Federal Reserve in the form of Federal Reserve notes, or treasury securities, treasury bonds, issued by Treasury directly to the public through the Treasury Direct program. Those are typically the only direct federal government liabilities you can hold. Everything else, bank deposits, would have a government guarantee, the full faith and credit of the United States that you see on that little plaque when you walk into the bank. Or it is a direct IOU of a private actor like PayPal that either is backed up by assets or hopefully has enough safety that you can treat it as good as dollars. But basically, this is the first time that we get access to the mainframe. Up until now, the only people that could hold digital accounts at the Fed were banks or foreign governments or other, approved actors like that. But this would be the equivalent of a retail account service or a retail cash service for digital content.
When we're looking at the typical crypto coins that everybody's like completely overheating over, just overly excited. I mean, you saw in the Super Bowl, if you watched the commercial, the bouncing QR code got me. I admit it. I clicked on it. But what is the difference really between cryptocurrency and government digital fiat, as you're saying? What is the difference there?
Well, the term cryptocurrency, doesn't have one clear definition. I would say that usually when we think of the word cryptocurrency, we're talking about currency systems that are secured using cryptographic technology, which arguably applies to regular money as well. If you've ever seen that little lock when you try to buy something with a credit card, it'll say SSL certificate or something. That's a form of cryptographic security that allows us to make payments over the internet without that information being available to anyone to easily steal. So we already use cryptography, but the way that cryptocurrency as a term became popular was the idea that instead of relying on a central issuer, you would rely on a network of untrusted actors who would essentially contribute computing power or other resources to keep the network alive. And so instead of having a government be the central issuer of the dollar, you would have a dollar that's issued through a network of actors who together, in theory, through their self-interest, produce a common good. Almost a kind of pure distillation of the neoliberal idea that we can create public goods through coordinated private market activity. And I think of it in two layers, really. I think of it in terms of who makes the commitment, what the legal obligation is, and then secondly, the technological architecture of the payment system, how it's designed, how it runs. A instrument that is either issued by the US government or guaranteed by the US government, I consider a form of public money. The full faith and credit of the entire legal system, the social political system backs that up. A privately issued digital currency does not have that backing. It can either be backed up by the institution that issues it, if there's one entity, or it could be the assets that are held against that instrument. So, there's a sort of pot of money or a pot of assets, whether it's crypto or treasury securities or bank deposits. And you can access those on demand if there's enough of them, and that's what keeps the value stable. But we are, in that context, there's nothing, I think, really unique about cryptocurrencies other than how many people are involved with it or how the asset backing is set up. There's been private monies operating alongside public money for thousands of years or hundreds of years in Western contexts. I lived in Ithaca, upstate New York. There's an Ithaca dollar that was issued as a community currency. There have been company scrip that's been issued by private companies that, you could pay at the local store in the company town. There's been all sorts of privately issued monies throughout the ages. Before bank deposits were government insured, they were bank notes printed by individual private banks. Often they had government privileges, like they could be used in payment of taxes, which gave them additional benefits, but they were still a private obligation at that point. The second layer is the payment system itself, how you make payments. And within the public money system, there are different kinds, right? You and I use cash. We can use it in some places, not others. Make the example, if you need to buy a candy bar, it's probably good to have coins. If you need to buy a car, it's probably not good to have coins, right? Same thing with $100 bills. Same thing with your bank account. If you'd like to earn 7% interest right now, it's probably good to invest in an I-series savings bond at Treasury. If you want to earn no interest but be able to make payments with your money, you probably want it in a bank account. So there's already different payments networks, payments architectures within public money. What these private cryptocurrencies offer is a different kind of payments network, whether it's stable coins or a blockchain-based network that can incorporate smart contracts, or can operate across jurisdictions or in places where banks will not allow you to make payments, casinos, online gambling, that kind of thing. So in that respect, I would say private currencies are, on one hand, a very old story of privately issued money and a somewhat new story of digital payments technology.
So let's jump into Congress for a moment. We got guys like Ted Cruz and others who are being backed by crypto, and they have their own interests at play here right now. Obviously, that's not great. But, just before I go too far down that path, I want to make one distinction. I know that, as many of us leftists would go, it was Occupy Wall Street that we were focused on, trying to bring about changes in investing in Wall Street. What's the difference between Wall Street being in New York City and crypto being out of Silicon Valley, so to speak? I mean, it seems like two forms of oligarchy controlling an investment Ponzi scheme that the people that are heavy investors get to win and the little guy typically does not. Is there a difference here? I mean, are we kind of giving a pass to Wall Street West?
I think anyone that says that the status quo is working is part of the problem. And I think one of the reasons that crypto has managed to grow the way that it has is because it's identified a real problem, which is the current system doesn't provide even basic payment services to millions of people. People don't trust banks. People don't have reliable, safe ways to have pensions and retirement funds, those kinds of things, without gambling in the casino. And it's been very clear, at least since 2008, and certainly for longer for those who are paying attention, that those actors who are ostensibly on your side are not often on your side. They're often betting against you while supposedly being your advisors and things like that. So in that respect, I think, if the debate gets framed as crypto is offering a challenge to the status quo and everybody who's anti-crypto is pro the status quo, we've lost. I think it's really imperative to articulate a real diagnosis of the problem today and offer an alternative. That said, I think we've had very many years of sort of laissez-faire, unregulated private markets, even securities regulation, which I'm very skeptical of a very effective regulatory regime, didn't exist at all at the federal level until the 1930s. And it didn't exist at the state level in the US till the 1910s. It was a sort of wild west with private, people selling penny stocks and bonds and things in a manner similar to selling snake oil. They'd sort of knock on your door and try to sell you some stock and say, it's 1880. This is the greatest thing since sliced bread. And oftentimes it was just completely fraudulent. So in that respect, I would say the banking laws that we've had since, the 1860s and then the 1930s with deposit insurance, the laws around securities regulation, the laws around payment system regulation are attempts to constrain these private actors from doing whatever they want. And crypto, to the extent that it's different, is in part a huge step backwards. It's in part a huge reset of those debates. And it says, what if we got to relitigate whether we should be regulated at all? Right. And you'd say, well, we have 70 years of history that says that we shouldn't relitigate that, right? We don't want to relitigate whether vaccines are good from like the first principles. We've already had that debate 50 years ago. And then someone says, well, okay, but what if we added the word tech in front of it? Can we relitigate it now? What if we say, oh, it's fancy and shiny and new? Can we relitigate it now?
Right.
And, you say no, and everyone else goes, wow, it's new, it's fancy, it's shiny. Oh, I guess we should have this debate from first principle.
Thanks for watching, and make sure to tune in to Status Coup's daily live stream Monday through Thursday at 5 o'clock Eastern Time and Fridays at 4 o'clock Eastern Time.